Today is Friday and it is quad witching, so I will spend some time reviewing what has happened in the recent history. So it looks like we've all seen it happen just recently when we rallied quite fast from the previous dip, and we rolled over with bigger and bigger ranges and volatility. Here we can see that the volatility is still quite elevated comparing to previous tops, and I'm not really sure that we will roll back to the downside, because maybe it will be better visible on another chart. Let's review the monthly anyway. So we are here within almost a 3-month balance, but for now we are above January range, but we couldn't extend higher above February. So looking at only at the monthlies, we could rotate back to the lows of this month. On the weeklies, it is better visible that we couldn't extend higher, and we are now back within this balance, and maybe on the daily it would be the best to display it. I think this one. So here we had previous occurrence of this like double top when we dipped twice, but didn't really get to the initial low. And here is I think that's similar scenario, but with higher high. And although some people say it is similar to this one, but I'm not sure. For now, the pattern is that whenever we dipped more, we didn't break the previous balance lows, so until it is holding, I think that we are destined to trade higher. Maybe not necessarily now, but I think that we won't break 37.20 anytime soon. So looking at the profiles, we are now within 6-day balance around the lows, and if we break lower, there is a high volume node around 38.90, and below that we have some unfilled gaps when you look from saddle to low of the next day. So 1, 2, and here is the third one. So this structure isn't that good, but other than that, we did correct the poor low that was standing out, and now it is looking a little bit better. We have 2 point of controls that weren't revisited on the way up, so this doesn't look that good, but it is also fairly okay for us to trade higher. So I think that first reference on the downside would be this high volume node, and the second one would be that one. It's going to be also previous high, so good confluence for at least a stop or a bounce. Going back to the charts, here 5-day VPAC is shifting higher, but not because of the volume, but because of time candle erosion or volume erosion, so we have higher volume here, but because the days are passing by, we have to consider last 5 days as the highest volume being here. Here we have also 20-day moving average and 20-day peg, so nice confluence. If we get here, we might expect a bounce. And looking at the ranges for this week, we had quite narrow range, 74 points. We already covered 73 points from high to low, so it is quite impressive. And if we looking at the ranges from history, we last year or last 12 weeks, our average is 115, so there is still some room left, but we are going to have some interesting supports below. First is going to be put wall, which got elevated from first 3700, then 3800, and now it is staying around 3900. I'm not sure how it will affect the markets since it is OPEX, and it might be rolling over, or if it expires today, how it will affect the prices if the puts are from dealers, they are long to delta hedge it, and if they have to cover, they will close their long, so we might see some downfall, but I'm not yet ready to speak of it with higher confidence. We are around 0 gamma, so we might see some bigger volatility below, which is going to make OPEX even more interesting, and also next week. If we trade a little bit lower, then we have this weekly expected move lows. I think it should sustain the drop. We've seen it a couple of times recently. Last week ended just around the highs. We did breach it on Thursday, but Friday did close within this range, and previous weeks we did manage to stay inside, and earlier I don't have it, but there are occurrences of breaking those, of course, because it is just one standard deviation, so the break should occur 1/3 of the time, but for now it is quite safe, 55 points, so around one daily range lower than our current price. When going to check the overnight, it is a little bit skewed to the upside, but fairly balanced, so I'm not expecting much of a correction when we open. Yesterday did correct some of this poor inventory that was getting long, and I'm not sure if all of it, because we did clean this low, but in order to correct this range, which is from 9.7 to 9.10, let's say 60 points, we could trade 60 points lower, so it would be to 38.50 around, more or less, but maybe it was enough to get new buying into the market. If we are to trade higher, here we have high volume node from last week. It might be a speed bump on the way up, and if not, I will be looking at this weekly range, lows and other references. So for now, until we are within lower distribution from yesterday, I think that we might see rotational trading, so I will be fading those moves above and below, unless we break with higher speed, volume and conviction. Then I will be trading with the impulse outside of this range. And if we start trending, I'm not sure, but I will probably fade this move, because I think that entire week we've been trying to get higher but really couldn't. So if we start dripping lower, the sell-off might accelerate, because of all of those call writers will be in trouble. Well, put writers, or people expecting that we will get higher. So we might see a late day sell-off into the close. Other than that, until we can get above this area, I think that it is mildly negative, and if we break below yesterday's low, it is most negative scenario for the day.